Hey guys, my name is Adam from Dodjit.com and this is your video briefing for Monday the 3rd of August 2009. So, what's been going on in the markets? Well, to tell you the truth, not really that much. Things have been going according to plan. The markets are heading higher. On Monday, if you look at Monday's session, you can see that we really continued higher. And we talked in our last video about this pattern that we were looking for. We were looking for these two blue boxes. We stated them in our last video that we were looking for the index to climb slightly higher and come close to the 1000 mark, and basically that's what happened. It didn't happen immediately. We were expecting it to happen on Monday, Tuesday, and in the end what happened was that it only turned out that on Thursday it really rallied higher. That was prior to the GDP result. So what's going on in the US? Basically, economic data is looking good at the moment. It's starting to show an improvement. The GDP, the revised GDP result showed that the economy had contracted less than expected during the second quarter. Earnings are coming out better than expected. Not all the companies. We've still got the financial sector that is slightly dragging along. We've got companies from there like Bank of America and Citigroup that are still showing some dramatic problems. So, not all things are rosy at the moment in the markets. We've still got to watch out. We've got this psychological resistance around the 1000 mark still, that I think that's going to be a little bit of a problematic area around here. And if we don't break through it, if we're not going to receive a nice candle that's going to break through it, so then we could retrace to test our recent breakout level. Basically, we're talking about a range at the moment from 950 to 1000. That's the range that I'm looking at the moment. So if you are trading at the moment, if you're trading long term, and you are already in a position from the breakout of 950, I wouldn't make any dramatic moves at the moment, closing out positions, stuff like that. We are still bullish on this market. We've been talking that we've been bullish already for quite a while. So things do look like they're heading in the right direction. We've got this 1000 mark to overcome. Now, what I just want to do, I just want to flip over to a weekly chart of the S&P 500. And what I want to show you is like this. Well, basically, we have broken out of our inverted head and shoulders. We've broken above the neckline. You can see the neckline right here. We've got our left shoulder roughly around here. We've got our head right around here. And we've got our right shoulder up here like this. We did break our neckline. We are climbing higher. We've broken our 50-day moving average. I think that we've got still a little bit further to go. If we look on a weekly chart at any resistance levels or support levels coming up, there's really nothing out there. It's just, it looks like it's going to be a clean, nice sell higher. But then again, we've got economic data coming out, so we could receive a little bit of battering of the markets in the next couple of weeks. But it does look bullish at the moment. I think as the stocks start to climb higher, also more money is going to start to pump into the market. I'm talking about investors' money. It's going to drive the markets, the indices, even higher. There's a lot of money floating out there at the moment, and people are looking for investments. If we look at the indicators, we can see RSI still got a long way till it becomes overbought. Things do look good. What I would be looking at the moment is like this. If there are any pullbacks in the market, I would look to take them higher. I wouldn't be thinking about shorting this market at the moment. Also, we normally tend to scan the markets, look for different stocks and stuff like that, and a lot of the positions that we're seeing at the moment are potential bullish ones. But that's something good for the markets. VIX is low, dollar is also low, a lot of money is coming out of safe haven at the moment. Things do look optimistic. It looks like we could receive a nice rally. Again, be careful. We've got economic data coming up that could ruin the rally. We've got the NFP result on Friday, and we'll just take it from there, see how it plays out. Now, what I also want to do is I just want to jump to a few Forex charts, and I'm going to show you why I'm also pretty bullish on this market at the moment. And the reason for that simply is because the risk for appetite is just coming back into this market, despite economic data, despite the data that's coming out from Europe, from England at the moment. And I'm talking fundamental data is really, really bad at the moment. It's not good. In the US, we're starting to see slight improvement. Europe, still not that good. Over in England, a lot of problems at the moment, but if you look at the charts, people are just rushing back into riskier assets. We can see the pound against the dollar. It broke out on Friday. We're now consolidating around our breakout point around here. So just play it by ear, see how it goes. Regarding targets, resistance levels, I normally like to use resistance levels or upcoming resistance levels. We've got our target roughly around here. Really depends how the markets is just going to play out. We've got important figures coming out this week. So, you know, the NFP result could be a little bit of a party pooper. So I wouldn't rush into anything before the result is out, especially as we've already broken out. We're just going to have to see how it plays out. Another few trades that we're looking at are, number one, the US dollar against the Canadian dollar. We are now on major support roughly around here like that, you can see. Now, basically, it did bounce higher last week. It didn't really rally, and basically the bulls just gave in to the bears and it dropped lower. We're now trading on major support, so we'll look for a break to the downside on this. And if we are going to drop to the downside, we're probably going to have a lot of stops around this area that are just going to get caught out. It will probably drop fast. Obviously, this chart, and we've shown it on a few of the reports, resembles the US dollar index chart. So if the dollar index is really going to break below support, so then obviously this chart as well is just going to drop down. If not, so then it's probably going to act exactly the same like the US dollar chart. Another chart that I'm looking at the moment, this is going to be our last one, is the New Zealand dollar against the Japanese yen. Now, if you look at the New Zealand dollar against the US dollar, it's already broken out of its range and it's really heading higher. I think people are still a little bit skeptical about this market, and this is really a nice carry trade to trade if you'd like to trade the carry trades. Now, if you look at it carefully, we've got our trend line roughly around here. I normally tend to try to boundary our trend to see where we're going. And you can see this trend that is really starting to converge together. But if you look carefully also around here, we've got our major resistance level around here. So we have got room to climb higher. Obviously, we're going to need a break on this. We are in the middle of our trend at the moment, so we can go any way. I'm looking to the upside. We're just going to have to see how it plays out. We've got important data coming out this week. Ease into the markets as they show us the opportunities. Trade the pullbacks. Hope it works out for you. My name is Adam from Dodjit.com.